Real estate has always been seen as one of the most powerful paths to building wealth, yet many people hold back because they believe they need a large amount of money to even begin. The truth is very different. You do not need to be a millionaire to start investing in real estate. You do not even need tens of thousands of dollars in cash. What you need is knowledge, strategy, and the willingness to use creative approaches that many beginners overlook. The idea that real estate is reserved for the wealthy is one of the most damaging myths in personal finance. In reality, the system is designed to allow people with vision to participate at different levels. The same government policies, tax incentives, and financing options that benefit large investors can also benefit you, even if you are starting with very little. By understanding how to use leverage, partnerships, and unconventional entry points, you can put yourself on the path to building wealth through property, no matter what your current financial situation looks like. The first thing to understand is the concept of leverage. Real estate is one of the few investment categories where banks are willing to lend you the majority of the money you need. If you were to buy stocks, you would need to put down the full amount. If you wanted $10,000 worth of shares, you would need $10,000 in cash. Real estate is different. With as little as 3 to 5% down in some cases, you can control a property worth hundreds of thousands. That leverage multiplies the impact of your money. Even small amounts can open the door to assets much larger than what you could buy outright. Now, many people wonder where they will get even that 3 to 5% if their savings are limited. Here is where creativity comes into play. One common beginner strategy is known as house hacking. This involves buying a property, often a small multi-family home like a duplex or triplex, and living in one unit while renting out the others. The rent from tenants helps cover your mortgage, and in many cases, it covers the entire monthly payment. This allows you to live with reduced housing costs or even live for free while the property grows in value. Over time, you build equity, which can be leveraged into further investments. Another strategy that requires little upfront cash is wholesaling. In wholesaling, you are not buying properties yourself. Instead, you find undervalued properties, negotiate them under contract, and then assign the contract to another investor for a fee. The key skill here is finding deals and negotiating. With wholesaling, you are essentially being paid for connecting opportunities with buyers. It is not passive income, but it is a way to enter the real estate world, build capital, and learn the market without needing a large down payment. Partnerships are also a gateway for those with little money. If you have time, energy, and knowledge, you can team up with someone who has capital, but not the ability to manage deals. In such arrangements, one partner might bring the cash, while the other handles the legwork of finding properties, negotiating, and managing renovations or tenants. Profits are then shared. Partnerships work because real estate is a team sport, and people often prefer to share in a profitable deal than miss out entirely. There is also the option of real estate investment trusts, or REITs. These are companies that own and operate income producing properties. By buying shares in a REIT, you are essentially investing in real estate without buying a property directly. The entry cost can be as little as the price of one share. While this is not the same as owning your own rental property, it allows you to start participating in real estate income and growth with very little money. It can also serve as a stepping stone, giving you exposure while you save for larger personal investments. Let us pause with an interesting thought. Imagine if you could replace your largest expense, your housing, with an asset that not only covered your costs but also grew in value every year. That is exactly what house hacking does. It turns the idea of paying rent or a mortgage into a wealth-building machine. This is why so many first-time investors start here. It is a beginner-friendly strategy that transforms your living situation into a financial strategy. Seller financing is another way to start with little money. In this arrangement, the seller of a property agrees to act as the lender. Instead of getting a bank loan, you make payments directly to the seller. This can be especially useful if you do not qualify for traditional financing or if you want more flexible terms. Many sellers are open to this if they want steady income from the sale rather than a lump sum. The down payment in seller financing arrangements is often negotiable, and sometimes it can be very low. Another overlooked path is the use of government-backed loan programs. In the United States, programs like FHA loans, VA loans, or USDA loans allow buyers to purchase homes with very low down payments, sometimes as little as 0% for veterans. These programs are designed to make homeownership more accessible, and they can be used strategically to enter real estate investing. For example, buying a multi-family property with an FHA loan allows you to live in one unit and rent the others with just a small down payment. Rent-to-own agreements can also serve as an entry point. In these situations, you rent a property with the option to purchase it later. Part of your rent may go toward the eventual purchase price. While this is less common, it can work when you lack the upfront cash but know you want to own property. It gives you time to build equity while controlling the asset. Real estate crowdfunding platforms are another modern tool. These platforms pool money from many investors to fund larger projects. You can invest small amounts, sometimes just a few $100s, and gain exposure to real estate returns. While you may not control the property directly, you participate in the income and appreciation of the projects. For beginners with limited funds, this can be a way to learn and earn at the same time. Here is another engaging thought. Real estate is not just about properties, it is about opportunities. Every community has houses that need repair, land that can be developed, or owners who are ready to sell quickly. The ability to spot these opportunities and act creatively is what separates those who say real estate is too expensive from those who actually build wealth through it. One of the most valuable things you can do with little money is to invest in your knowledge first. Books, courses, local real estate meetups, and networking with investors are often more valuable than rushing into your first property. Real estate can be forgiving if you buy right, but it can also be punishing if you buy wrong. By learning how to analyze deals, estimate repairs, and understand financing, you give yourself the best chance of success even when your funds are limited. Private money and hard money lenders are another option. These are individuals or companies who lend money for real estate deals, often at higher interest rates than banks. While the cost can be higher, they are often willing to fund deals quickly and with fewer requirements. If you can find a property with strong potential profit, these lenders may provide the funds you lack. The profit you earn after the deal can then be rolled into future investments. A critical part of starting with little money is building relationships. Real estate is as much about who you know as what you know. Networking with other investors, contractors, realtors, and lenders can open doors to opportunities that are never listed publicly. Many of the best deals never make it to the open market. They are shared within circles of people who trust each other. By being reliable, honest, and hardworking, you can earn a place in these circles, and that can be more valuable than cash in the bank. Here is a reality that may surprise you. Many people with money are looking for people with hustle. They have capital, but not the time to manage projects. If you can prove that you know how to find deals, manage renovations, or handle tenants, you become valuable to them. They will often finance the deals while you handle the execution, splitting profits. That is how people with little money can leapfrog into serious investing. Another way to start small is with mobile homes or manufactured housing. These properties often cost far less than traditional single-family homes, but can still generate strong rental income. Some investors start by buying mobile homes in parks, fixing them up, and renting or selling them. Because of the lower entry cost, it is a practical way to get into the game with limited capital. Foreclosure auctions and distressed sales can also provide opportunities. While these require research and caution, properties sold at discount due to foreclosure or distress can sometimes be acquired with minimal funds. In some cases, you can even negotiate directly with banks or sellers to arrange financing that fits your limited budget. At this stage, you may realize that the biggest barrier is not money but mindset. Many beginners hold back because they assume they cannot compete with larger investors. Yet history shows that countless successful investors started with nothing more than determination, creativity, and a willingness to take the first step. By using house hacking, wholesaling, partnerships, seller financing, and small-scale investments, they built momentum. Each deal provided experience and capital for the next. The compounding effect in real estate is powerful. A single property that pays for itself can eventually be refinanced, providing funds to buy another. Over time, 1 becomes 2, 2 becomes 4, and the growth continues. What matters is starting, no matter how small, and staying consistent. Think about this: if you wait until you feel rich to start investing, you may never begin. But if you start with little money and use the strategies available, your small beginning can grow into something far greater. Real estate rewards action and creativity more than wealth at the starting line. In conclusion, starting to invest in real estate with little money is not only possible, it is practical and proven. By using leverage, creative financing, partnerships, rights, crowdfunding, house hacking, and more, you can begin building wealth even on a tight budget. The opportunities are all around you. The only question is whether you will take the step to learn and act. If you enjoyed this video and want more practical strategies for wealth and investing, join us at Level Up Wealth. Subscribe so you never miss insights that can change your financial future. The journey to wealth is not about waiting until you have enough. It is about starting where you are and building step by step. Level Up Wealth is here to help you every step of the way.